Good morning everyone, thank you for joining us on a new week of True Potential's Morning Markets. In this morning's episode we would like to cover the difference in inflation dynamics we're experiencing between Asian economies and Western economies. On Friday we saw China post their latest inflation data, which showed a marked difference from what we're experiencing here in Western economies. On a year-on-year basis, Chinese inflation came in 0.2% higher. However, if we break that down and look at it over a month-on-month basis, we'll see that inflation rate was falling 0.2%. Now, the main differences that we attribute to why the inflation data is lower in China relative to what we've seen in Western economies is from the fiscal stimulus that governments supplied during the COVID-19 pandemic. Western economies applied a lot of fiscal stimulus and allowed consumers to build up excess savings, and that has really led to the demand scenario that we've seen play out. If we compare that to what we saw in Asian economies, that fiscal stimulus was applied to a much smaller magnitude. Therefore, the demand that we have seen from consumers has been smaller. This is also evident in some of the data that we've seen from China, where the reopening quite hasn't lived up to what we saw in Western economies. However, this data isn't just happening in China. We're also seeing it in different Asian economies. If we think about this morning's Japanese producer prices indices that was released, we're seeing a similar trend where prices are coming lower than markets' expectations, and also month-on-month prints are falling. So this is likely to feed through into the latest and next Japanese inflation print that is released to the market. Thank you for watching today's episode, and we'll see you tomorrow for our next video.